All right, today we are cracking open Coca-Cola's latest quarterly results. Now, you'd think a company this huge would have pretty slow, steady, predictable numbers, right? But this quarter, well, let's just say they really served up a surprise. Okay, let's just start with the number that made everybody's jaw drop, a 59% jump in operating income. Now, look, for a company the size of Coca-Cola, that is a massive, massive increase. And it immediately makes you ask the question, how on earth did they pull that off?
And here is where it gets interesting. Here's the real puzzle. Even Coke's own CEO, James Quincy, comes right out and says it's a challenging environment. So how do you get this kind of blockbuster growth in what are supposed to be tough times? That is exactly what we're going to unpack.
So first up, let's take a look at the report card. What were the big numbers, the headline figures that really defined Coke's third quarter? You know, the top line numbers show this really solid, steady growth pretty much everywhere you look. Net revenues are up 5% to $12.5 billion. Organic revenues, which kind of strip out some of the noise, are up 6%. And earnings per share, a huge 30% jump. But here's what's really, really interesting on this slide. Look at the difference between their volume, that's the actual number of drinks they sold, up just 1%, and their revenue, which grew way faster. Just hold that thought. It's a crucial clue for later. To really get how Coke pulled off that massive 59% profit jump, we need to speak a little bit of the language of finance. But don't worry, we're going to make this super simple. It all comes down to something called margins.
Okay, so think about a lemonade stand. Your revenue is all the money you bring in from selling lemonade, but you have costs, right? You got to buy lemons, sugar, cups. Well, your operating margin is the profit you have left over from each dollar you make after you pay for all that essential stuff. So obviously, the higher the margin, the more profitable you are. And Coke, well, they just got a whole lot more profitable.
Now, one last thing before we dive in. To really understand Coke's story, we need to know which version of the story we're reading. There's the official one, and then there's the adjusted one. This is the difference between what's called GAAP and non-GAAP. GAAP are the strict, official, by-the-book numbers. But companies also give you non-GAAP numbers, where they pull out one-off items to give you what they say is a clearer view of the core business's health. And a lot of analysts focus right there to see what's really going on under the hood. All right, with that little lesson out of the way, we are ready for the big reveal. Let's dig into exactly how Coca-Cola managed to expand its profitability so dramatically. Okay, so this chart might look a little complicated, but it's not, I promise. It basically tells the story of how Coke's profits grew so much. Think of it like building blocks. There are a few key factors that added to their bottom line, and we're just going to break down the most important pieces of that story one by one. First, let's just look at the big picture, the before and after. As you can see, last year's operating margin was just over 21%. This year, it's 32%. That is an enormous leap. To put it another way, for every single dollar of soda, tea, or water they sold, they kept an extra 10 cents as profit compared to last year. That is huge. So, where did that massive jump come from? Well, the biggest single piece was what the company calls underlying expansion. Now, in simple terms, this just means the core business was absolutely firing on all cylinders. They brought in more money through organic growth, and they did a fantastic job managing their day-to-day costs. This piece alone was the main engine of their profit growth. It added 2.6 percentage points to their margin all by itself. Now, there was another smaller, but still pretty important piece of the puzzle. It's called structural tailwinds. That sounds really complex, but it's mainly about a really smart strategic move: refranchising. Coke has been selling its bottling operations in places like India to strong local partners. And what that does is it streamlines their business and gives a nice little boost to the overall profit margin. Okay, so we've seen the financial mechanics, right? The numbers behind the profit jump. But what does that actually look like in the real world? Let's switch gears and look at the strategies Coke used on the ground, in stores and coolers all around the globe, to make these incredible numbers happen.
So where in the world is all this growth coming from? Well, this table tells us it's definitely not happening everywhere equally. The clear growth engine this quarter was Europe, the Middle East, and Africa. They saw a really strong 4% rise in volume. Meanwhile, you can see North America and Latin America were totally flat, and Asia Pacific actually dipped just a little bit.
So how did they do it? It wasn't just one magic bullet, it was a whole playbook of strategies. But let's focus on the biggest factor of them all: Remember that clue from the beginning? The number of drinks they sold was only up 1%, but their revenue grew way faster. Why? Well, here's your answer: pricing. A huge part of their success this quarter came from simply charging more for their products. You combine that with smart strategies like expanding popular brands like Body Armor and Fuse Tea, and boom, you've got a winning formula. So, after a quarter this strong, the big question is, can they keep it going? Let's take a quick look at what the company is telling investors about what's coming next. Well, the company is standing by its full-year guidance. They're telling the market they expect to continue this strong performance, and they're aiming for organic revenue growth of 5 to 6% for the entire year. It's really a sign of confidence that this quarter wasn't just some kind of fluke. And that brings us to our final thought here. When you boil it all down, so much of this incredible quarter was driven by one single thing: pricing power. In a pretty challenging economy, Coke successfully asked all of us to pay more. The multi-billion-dollar question is, how long can that strategy actually last? As people's budgets get tighter, is there a limit to how much we're willing to pay for a Coke? That is the challenge to watch.